Welcome to the Rapid Recap. It's March 26, 2015, and I have a wonderful Rapid Recap planned for you this week. At least I believe it's wonderful. We're going to talk about the diving board concept. Now, we will also talk about some stocks, and I've broken it down into three categories. We'll talk about the ABCD patterns, we'll talk about gaps, and we'll talk about breakouts, some stocks that are breaking out. And I've done it this way due to a lot of people getting the course and the technical analysis course, and I think it'll help. Now, I won't touch base into every little detail about these stocks that we would if we were in the course, but it'll give you some ideas in the current market conditions, what's going on and what's happening if you have the course. And if you don't have the course, it'll give you some insight in general, because I'll try to keep things as simple as possible. So this week, I do want to give you some news and updates about everything first. And first things first is we do have the technical analysis course coming in another box. We have another order. We shipped out one major order to a lot of customers, but at the moment we're running about 2.5 to 3 weeks behind. So for that, I apologize, and most people understand. I had a couple of people email me asking me when it was getting shipped out, but I just wanted to let you know that we're running about 2.5 to 3 weeks behind on the orders, just because we never know the demand during these pre-launches or how the manufacturing will go. So there's a lot of components that go with that, and that's one of the reasons that we're also able to offer such a large course for a discount. Now, with this in mind, today is the last day, and once that day is passed on the pre-launch, that's it. There's no discounts in the future as far as I can see for the moment, at least not till the end of the year, or who knows how long, because I don't play with the price too much on the training. It's just I don't have the time for it. So again, I apologize for the delays in the shipments, but they will get there, even if I have to personally walk that course to your door. So it will get there. So we should have that next shipment coming in Tuesday, Wednesday, and the box is the size of me. It's like 4 or 5 foot box filled with a lot of material. And again, so if you ordered about 2 to 3 weeks ago, then it'll be shipped out with 2-day shipping, and you'll get that very soon. So again, most people have been understanding just because it's a pre-launch stage, and it'll get there soon. Also, I do have some insight on some future trainings that I am working on. So if you go to the website, you can see here is actually where you can get the technical analysis course. If you still haven't got it, that's up to you. I'm working on a couple of projects. A few people asked me about the options course. So I am working on a major options course. So I started putting this on the right side just because sometimes I like writing, or, you know, as the stocks are moving or I'm watching the stock market, I'll work on a book. You know, I'll look at charts. I'll work on the other screens. And these are just some of the projects I'm working on. And I'd like to knock out the options mastery course sometime this year. I've been planning it, and the planning process just takes hours upon hours. So that's kind of my last big projects for the year, and I want to make it intense, and it'll only be available to people that have purchased the foundation options course, because it'll just go into too much detail where I can't have people mix and match some of the discs and sections. So planning on that, working on that, and just a few books. Books for me are relaxing to create, because I can just put on some music and work on the books as I'm watching the stocks move, and just quickly go back and forth. So we do have that section, and with the website as well, I did take down the free 20-minute chat. So there's no more free 20-minute chat, just because I found that not a lot of people were that enthusiastic about it. I did talk to a lot of great people, so if you do want to still chat, or you want to get in touch and you need a hand, I'd be happy to help you or do what I can do. Just, you know, go ahead and you can contact me from the contact page, and I'll do my best to cater to you, and we'll just chat and discuss some stocks. And finally, it's quite possible that next week we won't have a rapid recap just because I'll actually be in Florida for vacation after doing the launch of the course and working on some things. I need a break. And looking at the markets the way they are, it's quite possible that a sell-off may be coming. So it's a good opportunity for me to take a break since Christmas time, I never took a day off, basically, and that includes pretty much Saturdays as well. Normally, I take Fridays off, but then I do some work on Saturdays or even Sunday evening. So I try and do a lot, and it's time-consuming, and I need a break. So we'll see if I can get a few minutes away from the family, then I'll try and do a recap. But otherwise, I have to go to the beach. I have to take a breather. I have to take a break, and that's just part of life. You have to enjoy the things that you do, and I really love it. I love connecting with every single one of you. I love listening to you that send me an email that say, I got it, or I got this concept, and that to me is remarkable. For some people, they love skydiving. For me, I love connecting with people. I love helping people and teaching people because I love to see the light bulbs going off. That's just a personal thing, and that's what I enjoy. So you got to stick to what you enjoy. So with this in mind, let's move to some stocks and the diving board principle. All right, before we actually get into some stocks, I do want to mention the diving board principle. And this diving board principle, you can apply to life, you can apply to stocks, you can apply to your health, you can apply to your wealth, you can apply it in so many aspects. So let's draw a couple things here. So I'm going to use this little empty space in this notepad program, and we'll just draw a few things. So if you look at a diving board and you structure your life like a diving board, it's going to look something like this. Okay, so this is how a lot of people set up their life, is something like this. It has one solid foundation, and you have a diving board. So with a diving board, you walk across this board, you come up, you jump, you bounce, and you can sink and fall. It's one structure. It is one thing that's holding you up. It is the one thing that's your saving grace. Now, for many people, this is this area right here. This is their job. This is their work. This is their one marketing technique in their business. This is their one channel. Or if you think of it in stocks, this is one stock. You invest in one stock. And in theory, this is why people talk about diversification, is because of this. Okay, if you only have one thing, then this only one supporting concept that's supporting you is this one thing. If something goes wrong, if this diving board breaks, all of a sudden everything goes down the toilet and you're missing things, right? And that is the same thing as if you only have one stock trading strategy, which is really what we're going to base the lesson on. Now, if we do this and we go to a different concept and we start looking at the structure of a house, a Parthenon, a pillar, so this is the ground, and we start building out our structure, okay? We start building it out, okay? So here now, let's pretend this is our house. We have supporting pillars, and we have a few different things in a house structure. So let's say we have a few right here that are supporting, and they're holding up this roof, this house, this structure. And now you have all these things supporting your structure. And when you have this structure coming in, if one of these, let's just say this one right here, all of a sudden is gone, you still have all these other things supporting you. Whereas with a diving board concept, all of a sudden it breaks and you have nothing. With this building structure, with this Parthenon, with this pillar structures, you have a lot of pillars. You have a lot of things that can support you. And the more things that you can support, the more things that you have supporting you, the better off you are. So if you apply this to diversification, in theory, the more stocks that you have, the better off you are, because you have a lot of diversification. Now, I'm not saying just stocks. You can apply this to life. So in theory, if you have one thing that's real estate, you have one thing that's stocks, you have one thing that's coins, one thing that's antique cars. So if you have different things supporting your structure, you are going to be much better off. You're going to have a lot of things supporting your lifestyle. If we go to individual trading, so let's just say you're taking a stock to enter the stock. If you have ABCD patterns, if you know and understand support and resistance, if you know and understand about gaps, if you know and understand about volume, all these things now, all of these things, each one of these things now help you and support your decision. Your decisions, your percentage of success becomes higher. And the higher you can get that, the more solid you are, the more comfortable you are, the more confident you are. So the higher and the more things that you can create that are in your favor, the better off you are. Whereas with this diving board concept, if all you have is this diving board, you only have one thing to make your success. So if all you know about is the MACD and then the price, then that's all you have. You have one thing, and you have one thing as your saving grace. If all you know about is moving averages, then again, one thing is your saving grace. If you have only just the news and you're always following the news and that's all you're following and you're making decisions based on the news, then that's all you got. You have one thing in your favor. But if you have all those things working together in your favor, then you are better off. You have a higher probability of success with confidence. Everything working together allows you to create some big returns. All right. Keep this in mind as we go through the lesson, because it's a very important thing and it applies to everything in life. Everything. It applies to your health. It applies to your wealth. It applies to your personal behavior, dealing with jerks. It applies to just in general, anything you're trying to do. The more things that you can create that are supporting what you want to do, that are supporting what it is that you're trying to accomplish, the better your chance of success. Okay, so it's the same thing with school, education. First you finish high school, then you finish college. If you mess up in college, you can drop down back to your high school. Okay, then you have your first job, your second job, your third job. Okay, so you build the skill set. Okay, as you build the skill set, you start creating more and more of these things in your favor. And the more things that you have in your favor, the better off you are. So here, if one thing fails, you drop down to the next thing. If the next thing fails, you drop down to the next thing, and so on. It's building that support structure. And the more pillars that you have, just rotate that, is basically what you have is this house, this structure, this building. So let's talk some stocks. So here, looking at the overall market, looking at the overall picture of the market, you can see that we are, if we take a look at the monthly, we are at the highs. And I don't like being at the highs. We have some volume that's increasing above the average. I don't like that. This means that I'm ready for a pullback always. And we've been at the highs for a while, and I've talked to some of you that, watching the markets, been with me on the recaps that have never missed a recap yet, know that I'm just watching for that itchy trigger finger to go short on this market. And, any opportunity, that's what people are watching out for. So looking at this upward pattern, if we break this upward pattern, we could have trouble. Another critical line right here is another one that could spell trouble. Okay, so you're watching this level, and if these stocks, they don't hold up right here, you could see things going down further. And you can see right here on the daily, we're testing it here. If we tested it here, we're breaking it now, and we're increasing in volume. This could be troublesome. So if we get down here, it would be no issues that we can get down here if it continues to sell off. You're basically watching the health. A 50% retracement in a market would still allow it to be healthy. So if we look at the long-term picture, you can see that this market here going up, a slight retracement, and then it continued going higher right here. Nothing was wrong with that retracement. So the same thing here. If we retrace to the 50%, and I just want to show you something interesting, that from this market where the 50% level is, if you take the Fibonacci, those of you that learn Fibonacci in the technical analysis course, look at this, okay? We take that Fibonacci, we drew it out, Fibonacci retracement, 50% right here. Look at where it's coming. It's coming right to this level, right here. Okay, so the stocks can go down to about 13,000 and nothing would be wrong with that move. Okay, you can see that it's hitting it over here. So let me just draw it out for you a little bit. So we have a little hit right here. We have another few points of support and resistance right there. We have the points right here. That's our 50% level. That's a 50% level, and nothing would be wrong with that stock. Okay, so looking at the overall market, we are a little high, and if we have a pullback, it would be fantastic. It would be fantastic because they create new charting opportunities. They create new chart patterns. It allows you to get into the stocks at a lower price. Okay, so that's what I'm watching for. And you can do this analysis on the spiders, same concept. If all of these things are in alignment, meaning multiple things, like we talked about with the house, with the pillars, now we have the spiders, we have the Dow Jones. If we do the SPX, the same thing. If we take a look at the QQQs, you can take a look at it. It is the same concept, okay? You have the same concept. The more things in your favor, the better your percentage, right? So we take a look at all these things, then you start looking at the stocks individually. What's going on with the stocks? Are they powering higher or are they just isolating? So if you look at the Apple, we're just isolating. We're not powering higher. We did a retracement, popped a little higher, doing another little pullback. So in theory, again, for those of you that are looking at the ABCD pattern, here could be your A, here could be your B, B to C, C to D would be down here. Okay, so if we draw it out, let's clear the screen. Just to keep things clean, we will go right here. A to B, B to C, C to D. But this is a short-term ABCD pattern. If we look at the long-term ABCD pattern, we could look at it like this, okay? So which one is it? Depends on your time view, time horizon. So we'll see how things pan out. We'll see how the volume goes, where things move. But this one's been on a longer term trend, powering higher. So here's our other ABCD pattern. A to B, B to C, C to D. Okay, when the pattern completes, something else happens usually. So if you start looking at this, you start looking at it in a bigger picture, maybe that light bulb's going on, okay? It's going off. So let's look at some other ABCD patterns. So this is the first section. We're talking about some ABCD patterns. So IBM, you can think of it like creating an ABCD pattern, the same thing. So here we have A to B, B to C here is sideways, C to D could be going this way. You can see that in this stock, we had rejection a handful of times at these levels, okay? At those levels, we had rejection. So anytime it comes up, more than likely for now, until things prove otherwise, we will reject those. P&G, same thing, A, B, C, D structure. Let's look at how that breaks down. A to, let's get a thicker one. A to B, B to C, and C to D. See how that's moving? We have kind of a triangle pattern in there. It started to break right here on this level, and then tried to retest it, but it's coming back down. So we have these structures again coming in place. we have SanDisk. SanDisk. Here's a classic couple of ABCD patterns for you. So again, here we have A to B, B to C, C to D. Okay, let's remove that. So now we go again. Here's another one, A to B, B to C, C to D. Classic, classic. And you can take a look at the critical charts if you have the free 30 days, or even on some of the recent charts. Just go back on SanDisk. You can see there's the pattern. There's the pattern. What does the technical analysis tell you? It tells you crowd behavior, human crowd behavior. Okay, crowd behavior. By the time people hit this retracement pattern, these shorts from here are buying back their shares, and then again they reshort it, or new people step in, they want to short the stock, or they sell their shares because they got high enough. It's like, oh, I'm back to even. That's what happens to these ABCD pattern. American Express, here we go, same thing. ABCD pattern, here we are. We got A to B, B to C, C to D. If you look at another one, A to B, B to C, and C to D. So that one could go lower. Again, depends on volume. And you can see here we have this volume right here starting to pick up a little bit. Just look at that. Look at that tick right there, starting to pick up. So watch that support line right there of the lows on that swing point, and you'll see how that stock progresses. But so far, it's moving based on the technicals the way that it should. And finally, GMCR. What a beauty. Okay, so here, same concept. The ABCD pattern, we have A to B, B to C, C to D, and you can see how that one's playing out. Again, there was your little channel retracement, if you're noticing it. And in between, you had some ABCDs right in here as well. So you did have those. But if you look at it on the longer term, because we want to trade confidently, we want to trade relaxed, you do have some other little ones, but look at the long term. ABCD created really nicely, moving well. There's your higher volume spikes right there. And your entry point, you know, you have a few. You have another one that could create after it breaks this one. And you had another one that was, you know, on this retracement. There's a lot of different opportunities, but it just depends on your trading style. So there's your ABCD pattern on GMCR. All right, let's take a look at some gaps. Actually, let's take a look at some breakouts, stocks that are moving well. So I've been long Facebook during the trade since this breakout here, and stocks pull back. They do. This 1 day down erases 3 days of gains, and people get worried about taking profits as the stock goes up into strength. So as the stock moves into strength, you have to take profits into strength. I know it's sometimes painful. I know that sometimes you have to pay commissions, $5, $10, $15, whatever. If you got to make a phone order, it's $50 or however much it is. It's painful because, okay, and then it continues to move up and you say, oh, I shouldn't have sold it. But when these days come, sell-off days, you smile. You smile because you took some profits as that stock continued moving higher. Because 1 day can wipe out 3, 4. I've seen 1 day. Look at SanDisk. 1 day. This 1 day wiped out. What was it? 2 months of gains. So if we're going back to Facebook, this 1 day only wiped out 3 days of gains. This is why you take profits into strength. This business is about risk, money management, probabilities. That's what it's about. So taking some shares into strength, and now you're comfortable. You have a comfortable setting right here if the stock comes back here and bounces. Now it's kind of holding up a little bit here, but you're waiting for this pullback, and now if it bounces, you can add to your shares. If it comes back, you took half of your shares off, and then you have this as your stop. So that way you're back to your break even. So maybe you only took profits on half your shares and the others you broke even, but you're profitable, or at least at a scratch. You're a scratch trade. Okay, so that's what you want. You want to keep those risk and reward things in your favor. It's about that risk and reward. So here again, breakout, FRSH, same thing. 1 day wiping out 2 days worth of gains. This stock's been moving well. popping higher, and again, take profits into strength. A healthy retracement, this stock can come back here because of that gap right there, come back here, and then power higher. Nothing be wrong with the stock. That's okay. 7% on a stock like this because it's moved so far, that's fine. That's fine. It's normal. It's healthy. People have to take the profits. It's human behavior. It ran up pretty quick, pretty fast. That's just part of, the markets, part of the human psychology. That's the way the market works. So always take profits in the strength. ESPR, same thing. Here, stock continued moving higher. When they move too high too fast, they can retrace. And here we are, retracing and then bouncing again. So again, here's that gap. These gaps can be trouble. They weaken that stock. So with this in mind, let's move on and talk about some of the gaps. So Nike, what happens with gaps? Gaps typically fill. They fill because they're weak. It's like having a lot of holes in your roof or in your pillars. So here's the gap. Stock broke into the gap right here, continued to sell, and we filled the gap. Filling the gap means it gets into the gap and then it bounced on that gap. So that's what gaps do. So here's another one we have. This one ran across my screen talking to somebody last week. So here's the stock, popped higher. We have a gap. Gap is the area of weakness right here. So what can happen? Well, we started getting into that gap right around here. Okay, we were pushing down. The more you're pushing on something, the more likely it'll continue to go lower. It's like a drill hammer. It's like a hammer pounding. Okay, so here we get into this gap, and you can see we're getting into it. It's coming back up to retest it. Probability and chances are it will reject it and continue to roll over to come back to this $50 or $61, $62 level to this level right here. Okay, and then after that, who knows? We'll see. But it just really depends. But typically these gaps get filled. Here's another one. Here's another one I've been watching. If this stock breaks here because of this gap, actually let's start with Netflix first. Right here. I was watching Netflix here. This is a better way to do it. Watching this stock right here, okay, there's a gap right down here. Okay, so right below this stock, we have this gap, major gap. The size of the gap does matter. We have this little support line right here. The stock bounced here, came back, pretty much bounced here. So we created a support line. We can draw it. It broke through that support right there, tried to come back and rejected that. And now it's weakening. The volume's picking up. And we have this gap right here. Now, for me, I go short right there at this level, nibble some, meaning go lightly. And if the stock comes back here to this level and starts getting in, like that Cybex, CYBX we talked about, if it starts breaking this right here or right around this level right there, I'll get into that stock and get in it, and then we'll go down probably all the way to right around this level 350. So that means the gain on the profit would be from, let's just say 403. Let's say I get in it late at 397 and I get out early at 356. That's still a 36, 34 point gain, something that that I'm watching for the long term. So we'll see how this pans out. But you use $5, $7 as a stop in stocks like these. They're bigger movers, so you want to be careful. So now, same thing in Netflix or Amazon, actually. So here, same thing here. Look at this, pushing down again. Still not ready, because if it's not ready and it doesn't break, what can happen? Stock can pop higher for 10, 15 points. So you're waiting for that stock to break, excuse me, waiting for that stock to break lower and drop. Okay, because we have this gap here. This gap is an area of weakness. And if it breaks this level right here, we break it right here, I nibble. If we break this level, I add big, I add large. Why? Because more things are in my favor. I add 1 pillar, 2 pillar, 3 pillar, 4 pillar. So what is in my favor? I have a small position. That's one thing in my favor. Okay, I add another thing, my pattern. My volume's picking up right here, starting to. If that comes in, that's another thing in my favor. My support and resistance, the gap, all these things start adding up. The more things that I can tally that are in my favor, the higher the probability of success. And that's when you go larger. That's when you go bigger. That's when you make the big money, is when you allow these stocks to go 335 to, let's say here, 311. Even if you're late and early, okay, so you go maybe just for 19, 20 point gain. Some stocks aren't even $20. And this stock, you can get 20 point gain in a short run. So that's what I wanted to share with you today, is these different things. So we talked about ABCD patterns, like with SanDisk. Okay, so we have ABCD. We talked about same thing with American Express. Also, we talked about the gaps, like Nike. You can see it filled the gap. CYBX is starting to break into that, probably will fill. Amazon, also same thing, weakening. Netflix, same thing. So as you watch these leader companies, this is why I'm watching. That's why I'm watching these leader companies to see how they're acting and behaving, because this also tells me how the market will pan out. That's why I say we may be coming in for a sell-off. And, you know, you always want to take some profits into strength, like Facebook, like Fresh or ESPR. So there's a few of those that are, if you're long, fine. Nothing wrong with being long, nothing wrong with being short. It's just which side of the trade you're in. There's a lot of opportunities that you have, even stamps. We posted this on the recap of the critical charts, you know, this one's popping higher. You want to know where the ABCD pattern is? Well, here it is. I can pull these out anytime. A to B, B to C, C to D. Okay, does that look familiar? Cracker Barrel. Some of these things I don't share all the time on the rapid recaps, because for many people that are beginners, it's over their head. And that's why I have the courses, because for the people that really want to learn, that's what it's all about. ABCD pattern in this one, can you spot it? I'm sure you can. So here it is. After I zoom out, you can see, okay, so A to B, what is that? A to B, B to C, C to D, okay? That's the projected move, okay? That's the long term. If we look at the weekly, look at that. That's the long term. That's why I was looking for this one to the upside, was because of the long term. Now, in the weekly, it's almost Friday. It's almost Friday. And we're going down on 1.2 million shares. Okay, we popped on 3.1 million shares. Share calculation. This is something maybe that we can get into later in the future. But as you start looking at the total volume and you start looking at the numbers in detail, you start spotting these things. And more things, the more things that can be in your favor, the higher your probability of success. I'm not saying you're going to have winning trades every single time, but the more things that you can have in your favor, the better your chances, the more comfortable you are at trading, and just a more peace of mind. So I hope this was insightful. I hope you learned a lot. Remember about this pillar concept and diving board concept. If you have a diving board, just one thing in your favor, whether that's in life, one thing, one job, one revenue of income stream, one investment, it's not a bad thing. It's not a bad thing when you're first getting started. As you start getting better, you may want to diversify. In terms of stocks, you shouldn't diversify more than 5 stocks if you have $1 million. And that is personally because you have focus, attention that you really need to cater to. So if you have $1 million, 5, 6 stocks is more than diversified. Otherwise, 1 or 2 stocks is okay, but it is a little more risky. But then you should also have other things in your investment. So maybe real estate, maybe coins, maybe antique cars, that's investments. But if you talk about income streams, maybe you have a business, maybe you have stocks, maybe you have just residual income coming in from something you've done in the past. Whatever it is, you building these things. And the more that you can build, the more things that you can build in your favor, the more solid of a support structure you have. So that's what you want to do. If you're choosing a stock, is the same thing. You want to choose as many things. You're watching out for many things in your favor, so that way you have the highest possibility of success. Okay. Thank you for joining me in this week's rapid recap. Again, for those of you that ordered the technical analysis course, we will get it out. Don't worry, it'll come with time. We do have the shipment coming. The next set is coming, and the minute we get it in, we'll have it box shipped and ready to go. So appreciate your understanding on that with the pre-launch. And, thanks for sticking with me, for learning, and really appreciate all of your emails, the phone calls, the chats. That's really what I do this for, is that connection, is the way to contribute. I love studying. I love educating, and it pushes me. It pushes me to also be better. So me, working with you guys, teaching you concepts, it keeps me on top of my game. It keeps me always learning. It keeps me getting better. And overall, it's a give and get. So by me helping you, you help me, and it's a win-win for everybody. So thank you. Thank you for just, being there, for picking my brain. And it's been really a pleasure just getting to know you guys throughout the last couple of years so far. I love it. I love it. And I just really, truly appreciate it. You have no idea. So again, next week, we're going to do the rapid recap. Maybe if I can sneak away from the dinner table, and I'll try to do the rapid recap, but I won't be following too many stocks. And in fact, I'm paring down most of my positions. I have sell triggers in place because we'll be going to the beach, boating with some friends and so forth. So I just need a little breather, but we'll see. If I can get away, I'll do the rapid recap. But you got to spend time, got to enjoy life. You got to go out, do those things, and make it count, make it meaningful in your life. So thanks again for joining me. And I will possibly see you next week, but if not, I'll see you the week after, and we'll continue working some stocks. If you have questions, feel free to email me, get in touch with me, and I try to get back to a lot of you with specific questions as quick as I can. Sometimes it takes a couple days, sometimes it takes 5 or 6 days because I get an overwhelming amount of email, but I try to be as quick as I can to most people. So thanks again, and I will chat with you soon. Make it a great weekend.